way. When a city is trying to raise funds for infrastructure, what would this wording limit them from doing?
In layman's terms, or in economist terms, they're mutually exclusive groups, aren't they? The names of taxes can vary. So the concept here is the tax that's created in this bill, the corporate activities tax, the commercial activities tax, is applied on the seller at the quarterly level, and they look at all of their business receipts. And there's some there's a subtraction and there's a threshold, and setting those things aside for right now. So they have that time period, and they look at their business receipts, or defined as commercial activity here, in that time period, and apply a rate to that total amount. So in that sense, that tax can't really be traced back to any one particular customer in a dollar sense, because the business will have their collections throughout the quarter. They'll look at what those are, and then they'll apply the tax rate to that and remit that amount. So I think that kind of gets at, I'm trying to come up with language that gets an umbrella description and distinguish among the various types of excise taxes that are out there.
Helt, or are you okay?
I still am not clear on what this tax would prevent them from doing. Well, because our cities and counties have to raise money for infrastructure, let's just say for sewers, and they have to come up with creative ways to do that because our systems development charges don't always cover that. And so there's a lot of concern around, could this tax limit future infrastructure projects? And so I just want to be clear that yes, it does in this way, or no, it doesn't. And so I don't know, I don't feel like I have clarity on what they need to know.
Co-chairs, Representative Helt, the preemption, which would prevent a locality from enacting a new commercial activity tax, is limited to taxes that fit within the definition of commercial activity. So that definition starts with the amount realized by a business from transactions. It also includes a number of exclusions for a variety of reasons. Some of them are things such as taxes that are collected by the business but then passed through and remitted to the state. Some of them are policy choices. All of those things would not be preempted, so that a locality, a local government, could impose a tax on receipts of a business of that nature. And again, all of the other types of taxes that a locality might look at, where the incidence is on the customer, such as a sales tax, such as a retail tax on marijuana, a tax on cigarettes, which actually some of those things are preempted elsewhere in statute, but this preemption would not address that. It would only address a tax imposed on commercial activity. So essentially, the receipts of a business that are taken in when they sell, usually when they sell a good or a service. The other types of taxes, such as construction excise tax, taxes that are measured by other amounts. I believe often those are measured by building permits. Those would not, they're not relevant to this tax or to this preemption as far as the localities go.
Representative Hernandez.